Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the video research from the ForexPeaceArmy.com that dedicated to the euro currency. Let's return to discussion of this currency pair. Today is the last day of January, and we will start as usual from the daily time frame. Well, in our weekly research and in our trading plan for the Monday, we said that market now stands under solid resistance area on the daily time frame, and it's very probable that it will show at least the shallow pullback to the weekly pivot point in the starting day of the trading week. So that has happened. So you can see that market has hit this daily confluence resistance 131.98, 132.40. That is also the important level on the weekly time frame. It's rather significant and has shown this kind of some pullback. So in general, this gives us a dark cloud cover pattern. So you can see that market has opened with the same gap to the upside and then shows the deep move inside of this previous trading session. So you can see this is a very good example of the two bars pattern that calls dark cloud cover. So if we will discuss the situation from the perspective of this pattern, we could say that this pattern will be valid till the market will take out this high. It's 132.37. Until that will happen, probably we could expect some consolidation or deeper move to the downside. Anyway, if you are bearish, you have a bearish view on the market and you want to enter on the short side of the market, you could use this pattern as the context for the placing stop order and to enter. Because this is the bearish pattern, market stands at the solid resistance area, so market could start move to the downside. Even more, if you have read our analysis, weekly analysis, you probably know that we expect some deep retracement on the daily time frame, since this is the first pullback after the long-term bear trend. And very often, we could say even as a rule, market shows the deep retracement after the first initial pullback in the long-term bear trend. Also, this is in general overall situation now is a good context to the possible Jordan Napoli bearish directional pattern on the weekly time frame. So the one problem with this is that market could proceed a bit high, so it has at least 1-2 weeks more to start this retracement, because the Napoli pattern suggests that this should happen during 1, 2 or 3 weeks after the penetration of the 3x3 moving average on the weekly time frame. So previous week was just the first penetration. But still, this also could happen from after the first penetration, and that's why we should be extra careful with the possible reversal and bearish patterns that could appear at the significant levels, especially at the significant weekly levels, and that is one of them, 132.40. So in general, I suppose that the short-term perspective has a good probability for the short-term bear trade. Well, on the 4-hour time frame, what we see, that is our parallel channel, upward parallel channel that we have discussed in our weekly research. And we said that since market stands at the solid resistance, at the Friday market has closed right here, we said that probably if you have the bullish view, you need to wait at least the pullback to the weekly pivot point. So that has happened yesterday. Market has shown this pullback, tested the weekly pivot point, tested the lower border of this parallel channel, and continue move to the upside. But here is very important detail exists. Take a look at the MACD indicator. First of all, this we can see this bearish divergence, but this is not the big deal currently. But at the second pullback from that level, you could see the trend holds bearish. This is very common for the head and shoulders patterns. That's why it's a bit worrying me in the terms of from the bullish perspective, that if market will start move to the upside, then probably it should accelerate further since upper border of this parallel channel higher, and market should not show so deep deep divergence and should not hold the trend on the bearish side when this pullback is happening. When that is very typical for the head and shoulders pattern, when during the right shoulder forming MACD indicator holds trend on the bearish side. And here we should be extra careful, because this could be the pattern that we are waiting for as the starting point of the potential retracement to the downside. So if you are bullish, it's better for you to wait when the 4-hour time frame will shift to the bullish side and take out of this high. Only in these situations probably will be relatively safe to enter on the long side of the market. Until that will happen, it's better to sit on the hands. If you are bearish, well, that is your chance. Since this is very tight stop, you could place just a 30 pips to the previous high, with some maybe room for the breathing room for the market, a bit high of this top. Since this is very, very nice, I suppose, possibility for attempt to enter on the short side of the market. How you could act? First of all, take a look that the high stands at the 127 extension of this swing to the downside. Now market at the 786 resistance, as we will see on the hourly time frame, and this gives us that this is also, this swing down gives us 127 extension precisely at the top of the head. The harmony is very typical for the head and shoulders pattern. Although 1618 is more common for the head and shoulders pattern, this also could be the 127. So currently we're at the point where the market, according to this pattern, should turn to the downside. If this will not happen, the market accelerates further. This will tell us that probably this pattern will fail and market will continue move to the upside. But currently market at such point where this is optimal combination of the risk reward, and this is we could say the excellent triggering point for the potential enter. Since this is deep retracement, very tight stop, and the target of this move will be significant. So take a look. The minimum target of this head and shoulders pattern, I suppose, will be A, B, C top, 100% extension, 130.44. It's 200 pips, not small move. Right in an area of confidence support on the 4-hour time frame, 130.37, 130.44. This is a really strong area of support. How it's better act if you will decide to enter on the short side of the market? Enter, as we said, place stop above the high, and wait, look how market will behave in this area. When the market starts to accelerate to the downside, move your stop to the break even and watch the movie. Sit on your hands, watch the movie. This is the area that should worry us, because this is confidence support and agreement with this ABCD pattern. This is nice context for the Judd Napoli head and shoulders failure pattern, since, as you know, the theoretical target of the head and shoulders 1618 extension. It's 129.46. It's right here. Also, it almost equals the classical approach, the distance between the head to the neckline. If you will count it to the downside, you will get approximately the same number. So that is the classical target of the head and shoulders. At the same time, market, if this is really start point on the weekly pattern, market will proceed lower, and our target from the weekly perspective is 128.60 area. It's right here. So later, choice is up to you. You could, for instance, take some profit in that area and keep the position with the hope that market will proceed lower, or do nothing. Just trail your stop to the downside. Well, then you will close position if market will show some pullback. But keep an eye on that level. This is really significant, because here market just could turn to the upside again, could lead to the failure head and shoulders pattern, since this is market head and shoulders will not reach the classical target and will reverse to the upside. That is really happens very often. But in general, this bearish scenario now is really attractive, at least to the 130.50 area. It's right here. On the hourly time frame, what we have to see. Here is, by the way, the 76 resistance that we have just discussed. By this price action, could be the nice possibility for the Judd Napoli double repulse sale. If market will form here the double repulse sale pattern right at that area, this will be the triggering pattern. By this pattern, you could enter on the short side of the market. This will just confirm, give you more confidence that market is ready to continue move to the downside. You are not necessarily have to use hourly chart, but you could use the 30-minute chart, 50-minute chart. Probably on the 30-minute chart, this thrust to the upside, and potential double repo pattern will be looking more nice than on the hourly time frame. But that is our trading plan. So that's been said, it's a bit difficult to understand. It's a lot of details in current environment on the market, but as a conclusion, so market stands now at the solid resistance area. We expect that probably market could start a deep retracement by the weekly pattern, and it is possible that this move to the downside could happen right now. So probably market is forming now the head and shoulders pattern on the 4-hour time frame. Bullish scenario and the cancelling of this head and shoulders will happen if market will take out this high and accelerate further and shift the 4-hour time frame to the bullish side, right here. Bearish scenario suggests that you should drop your time frame to the 15 and 30-minute chart and wait for the directional Jordan Napoli pattern double repo sale. Maybe here we'll see the butterfly sale also on the 15-minute chart, some pattern that could tell you that probably you could try to enter short from that area. Stop should be placed somewhere above that high, since this is the crucial point as for the bull scenario as for the bearish scenario. Well, if you will enter short here and this will be successful, the market will accelerate further by this large ABCD pattern, the first point to watch for is profit taking is 130.50 area, because here this pattern could fail and market could return further to the upside move, because this is confidence support and agreement. This is really strong area of support. So here's the choice is up to you how you will manage your position. So you could put your stop to the break even right here and do nothing. You could take partially the profit from this area and hold position. You could close the position totally in that area. So that is a bit personal. Well, if market will not reach this area till the tomorrow's our update, then probably we'll discuss how better act depending on how market will behave during today's trading session. Well, that's all for today trading according to the trading plan. Watch and keep an eye on the crucial levels that we have discussed. Well, and good luck to you.